Trade Genius.
What's going on, guys? Philip at Trade Genius. All right, I wanted to talk about this headline that's been circulating. A lone Bitcoin whale likely fueled 2017 surge, study finds. And we've seen this make the headlines on several different news outlets, as most FUD usually does. But I wanted to get into why I don't think this is the case. And actually, we're just going to go over a CoinRivet article, or actually a Cointelegraph article that sums it up, I think. And, the study basically talked about how as money came or price pulled back in the bull market, more tethers seem to have come in at the right time and buy up. And that was something that had been argued on crypto Twitter for a long time during that run up, that, tether was basically being printed and propping up the price. But there's some points that you need to balance that out with, and then we're going to get into in a counter argument article, 3 reasons why one trader didn't manipulate Bitcoin price to 20K. And what this gets into is that basically how the research, fails to understand exchanges. And this is from the Circle CEO. So Bitcoin price highs in 2017 were not the result of a single trader on an exchange. CEO of Circle claims. In a series of tweets on November 4th, Jeremy Allaire disputed this recent research, which claims Bitcoin run to 20K was a result of efforts by a single wallet holder. Allaire said the idea that one Tether trader engaged in manipulation on an exchange had no logic. So the exchanges use the omnibus wallets that pool all customer balances and transactions on and off the exchange. So an analysis that shows that a single wallet was involved in inflows from Bitfinex to other exchanges is meaningless. All it shows is that traders were trading. Others, meanwhile, including Cointelegraph contributors, followed Allaire in disagreeing with the conclusion that entire markets were swayed by a single wallet. They go on to say that every market is manipulated. So, just because of assets going up in price, a lot of times that's just going to be the culmination of, bulls and things like that. But, and there are going to be situations where, especially when market liquidity dries up, that you can get the moves that seem very suspicious, that take out lows and then reverse very quickly. You will see that a lot on Bitcoin. More often than not, though, you'll see it in times of illiquidity, like we have kind of current situation, very tight ranges, and you'll start to see some of those, what they call scam wicks, take out a high or a low and reverse quickly. Those you can make an argument for a bit of manipulation to an extent, but the amount of money coming into Bitcoin in 2017 was just astronomical. And this is a good point here. More tether does not mean higher BTC price. The dispute comes as curious movements in Bitcoin price continue. As Cointelegraph reported, several recent jumps have sparked speculation, including one which induced the second biggest daily gains in Bitcoin's history. In December 2017, Tether's market cap was around $1 billion, but while Bitcoin's price is now 50% lower, Tether's market cap has increased 4 times over to current levels of $4.1 billion. So therefore, the issuance of new USDT or tethers does not directly correspond to BTC USD staying higher. And then China breaking exchanges. A further theory about the 2017 activity centers on China. According to Elaine O, a Bloomberg contributor, formerly with Bitcoin mobile wallet app Abra, exchanges were unprepared for the consequences of Beijing's ban on crypto trading. So the way it worked was, once the ban was in effect, traders had no way to trade crypto back to yuan. So they shifted to tethers on overseas exchanges as a substitute for fiat currency. After a while, the yuan is roughly pegged to the dollar, she summarized. The result, along with the initial coin offering or ICO phenomenon for exchanges, was conspicuous. She added, Coinbase saw so much trading activity that the exchange broke. And the idea that a lone whale fueled this year-long Bitcoin bull run is more than a little silly. And, I would agree with that. CoinRivet does have another article similar to that. What I thought was interesting, if you looked, what did the Google Trends show? We had a huge spike in Google interest in Bitcoin, keyword searches spiked at the end of 2017, which tells you largely that was retail driven. So you can't really honestly say one person was responsible. You had massive bull run from China again. Same thing that happened when it went to 1K, when Bitcoin spiked to 1K at the end of 2013. It was just there was just a lot more money coming into it. And, and this is a good key indicator too, of when bull markets are kind of getting toward the end of their phase. You see a big spike up in interest like this, and that's usually like part of the blow off top on things. So culmination of buyers, and it gets to the point where they're all coming in. The last ones are coming in all at once. And then the true organic demand really is a bit lower. And so you get this price fall off, this demand fall off. And then people, price equalizes lower. So anyway, just thought I would share that with you guys. If you really look at it, the demand was it was very spread out. Blaming one person that was behind tethers on Bitfinex doesn't quite make sense. It's plausible, but not probable. So it's more along the lines of what we normally see at the end of halving cycles, where you have the big, like we've shown many times, you get the blow off top, and then the bear cycle kicks in for a year or so, and then you start grinding back higher into another halving phase. So halving cycle is probably more the reasonable explanation here on these big market tops that we see in Bitcoin. All right, guys, well, I just thought I would cover that since that headline was circulating. A lot of times that FUD will get put out by different outlets, and a lot of times will be caused by certain market participants to see if they can get lower Bitcoin pricing. There's some manipulation theory for you. But traders, friends in the news outlets, get them to push these articles. It's been going on for a long time, that technique. See if they can get a drop in price. This one didn't really cause too much of a drop in price in Bitcoin here, but tries to further the argument that Bitcoin's not ready for prime time and can be easily manipulated. But all markets are subject to that to a certain extent. It's just, but there's money to be made, and over time, the big picture with Bitcoin and the stock to flow and things that really seem to drive price and the halving events are really what causes the price to move. All right, guys, that's it for this video. Appreciate you guys watching. Please hit like and subscribe. I'll see you in the next video. Take care. Bye-bye.
Trade Genius.